Hi there, another video in the Fresh Portugal video series for expats taxation in Portugal. I'm Zé Fischer, I'm the founder of Fresh Portugal. With me, Pedro and Brian. Pedro covering the Portuguese side, is being a Portuguese tax lawyer. Brian covering the US side, being a US tax lawyer. And the subject for today is US remote workers. So basically people moving from the US to Portugal, still working for someone in the US. That can be employees, it can be self-employed people, it can be people utilizing a company. We're actually going to discuss these options with the pros and cons and so on. But essentially, people still working as opposed to people who are retired and so on. So yeah, a very complicated subject actually, we'll start kind of untangling it one part after another. So someone is moving from the US and Portugal, and they have an employer, and that employer, let's take the initial position. That employer tell them, well, I don't want anything to change. I just want to carry on with the employment relationship as it is. Is that viable? Let's start with Pedro from a Portuguese perspective, and then we'll move on to Brian for the US perspective. So can you tell your employer, yeah, sure, I'm happy to keep being employed?
Well, basically, you can continue to be employed by that company. However, due to the provisions of the tax treaty between US and Portugal, and as a general provision of tax treaties following the Model Convention of the OECD, you will need to be registered basically as an employee in Portugal. Why? Because the sovereignty for taxation from any kind of income derived from work belongs to the sovereignty of Portugal, which means Portugal will tax your employment income in this case. As you can imagine, it would be quite hard for the company in the US who has no registered in Portugal to make payments, withholding income tax, or make payments for Social Security. So they will need to register it here or to hire you through an EOR, an employer of records. That's the two possible solutions to maintain basically an employment contract from the United States within Portugal, and to also be in compliance with the Portuguese legislation and the international tax rules.
And from the U.S. perspective, what's the employer's exposure from a U.S. perspective?
Sure. There's two sides to that coin, right? The employer says, I don't want anything to change. And the employee decides, well, great, then I'll move to Portugal and just sort of carry on as I am. Well, technically, then, yes, the employer is in violation of its obligations to register in Portugal, to pay your share of Social Security in Portugal, to provide you with all the benefits Portugal requires for its employees. However, is Portugal going to go out and then tag your employer and haul them into court and say, do this? Well, we can't say for sure what the chance of that happening is. Theoretically, yes, that's possible. Certainly, if Portugal notices you doing this, then Portugal, as the employee, Portugal would have some major issues with you living in Portugal, not registered and paying your share of Social Security and taxes. But from the U.S. side, if you just sort of carry on that way and continue paying your full freight of taxes as if you had never left the U.S., the IRS isn't tracking your passport to know that you're physically in Portugal. So from the U.S. side, if you carry on that way, then a lot of people unaware of this situation we have found are doing that, then the IRS isn't going to send you a letter. You're paying all the taxes you could possibly owe, and the IRS isn't going to look for a way to give you a break on that.
So as an employee, you should be paying taxes in Portugal. As an employer, you're supposed to register and pay employers' taxes in Portugal. And in reality, people are just doing it. Is the exposure, Pedro, purely hypothetical, or is there real risk here?
Well, I could say that it is not that hypothetical. I think it's quite possible that if you stay for a long period of time in Portugal, for example, and you start to show that you have a lot of expenses and you are basically just reporting your income as foreign sourced in the U.S., because it's not exactly a reality of facts, because you are working from Portugal. You could only report it as foreign sourced if you were working from the United States under some circumstances. So it is hypothetical because it couldn't be enforced without an audit, for example, but the risk of an audit, it's always. If it's going to be enforced or not, it's much more of a matter if the tax authorities will notice that. Certainly with time, certainly with a lot of crossing information, it will happen.
But assuming we want to live in a country and pay taxes properly, employment is tricky.
It is a little bit, because it's not usual for foreign companies to rest in themselves paying employees in a certain jurisdiction just for normally one employee who have moved. That it's uncommon for them to choose that path. That's why the EOR or alternative routes for hiring someone are the best paths here, because also, if you think a little bit more about that, if a company rests for an employee in another country, there is always a chance that a permanent establishment for that company could be deemed in that specific jurisdiction, and that's why companies always try to avoid that.
Let's just translate what you've said now to plain English. So if you work for a company and you're employed by that company and you generate profits for that company, it's not only employer taxes that they could end up needing to pay, but also some of their income taxes, the corporation taxes for the income that you've generated, because you've created a branch or potentially created a branch. So great. So let's talk about, you mentioned one possible solution to this problem, which is an employer of record. Not one that I particularly favor, but let's kind of see what how that plays out. And we know from our clients working for more corporate employers with legal departments that because of the risks that we've just discussed, they wouldn't allow remote employment without the registration of a branch, and they will try and utilize these employers of records. So first, let's cover the taxation aspect of that. So if someone is working through an EOR in Portugal, and an EOR, for those of you who don't know, is like a company that is only present for the purpose of fulfilling compliance obligations. So there is a registered company in Portugal paying a salary, and that company contracts with the real employer and thereby pays the taxes for that taxes and benefits for that particular employee. So from a tax perspective, what would the tax outcome be, Pedro?
So if you're hired through an EOR, you're basically hired by a company that is, resident of Portugal. So instead of being directly hired by a company in the U.S., for example, you are hired by a Portuguese company which will maintain your compliance and will expose you to standard taxation for employees in this case. So you will be an employee in Portugal under the taxes of an employee, under the contributions of an employee for the Social Security. And of course, we can always think about the NHR intervening here. And well, it will not save that much, because for a national sourced employment income, as it will be with the EOR, the best deal you will have will be under the high value activities of the NHR, which will give you a 20% flat rate without deductions for your employment income. But normally, you will be exposed to the standard taxation in Portugal.
So let's just break it down for a second. Assuming the 20%, so you're a software developer, assuming you have the access to the 20% flat rate. So 20% flat rate, no deductions, 11% Social Security, which puts you on a 31, well, a little bit less than that, but roughly 30%. And then the employer needs to pay Social Security as well, which is 21.75 or 23.75. percent. And presumably, since employers look at the overall cost of a person to them, even though the employer is paying that, it's in fact part of the overall compensation. So if the alternative is a cheaper tax structure, then perhaps that should be looked at in the overall scheme of taxes. So you're looking at approximately 50%, right? And that is with a 20% flat.
With the 20% flat rate. Yeah. Without it, it could reach 48% just for the income taxes. If you aggregate value of the costs of the DOR, the costs of Social Security for both sides, employee and employer,
and the
sky is the limit.
Yeah, could be looking at like 70%. And hence part of why we don't like EORs. And I think I've always strongly advocated against EORs, because why would you come to a country with tax benefits and end up with over 50% tax burden? But perhaps anyway. So employer of record, very high tax outcome, direct employment, problematic at the very least. So let's see what we have left. So the next one is self-employment. Again, we have people who are high value activities that are on the list of what Portugal wants to see here, and we have people who are not on a high value activities list. The ones with high value activity have access to the 20% flat rate, but in self-employment it's actually better than that, isn't it, Pedro?
Exactly. Normally it's a route that people choose when they're moving to another country, not on Portugal, but it's a solution, because in the first moment that you become basically a freelancer, an independent contractor, self-employed, you name it, there are different names in different jurisdictions. In Portugal, you can basically call it yourself as an independent professional. And in this case, taxation will be a little bit different from the employment situation. Why? Because as an independent professional, there are some presumed, assumed deductions from your own personal expenses that your employer, of course, should be in charge. So in this case, you have costs to maintain your own activity, and this generates certain conditions under the law that depends on the type of accountability that you want to have in Portugal regarding your activity. Normally, what people who have strict professional activities as software developers or, consultants that works with a variety of companies, they choose to be under the simplified regime. And the simplified regime of accountability results in a coefficient that will be applicable to your gross income. And this coefficient, after applied, it will generate your taxable income. And then in this taxable income that will be subject to the rates of the income tax. Generally, if you are an independent professional, this coefficient will be 75%. So only 75% of your gross income will be exposed to taxation. And that's a huge difference from the employee situation. So it just reduces your gross income. It will make you pay less taxes, and also we need to consider the Social Security contributions for independent contractors, independent professionals, because as for the Social Security, the contributions will be calculated in estimative based on a coefficient applied to your gross income. So basically 70% of your gross income will be used as the base for the contributions. So there is a 21% rate to be applied for this 70% of your gross income in order to establish what it will be your Social Security. So we are talking about basically a 15% effective rate to determine what it will be your contribution with a cap as well. And as you well mentioned, there will be a cap for it. So this 15% could generate, an immeasurable amount of contributions. There will be a cap that is updated every year based in a specific index. But as for 2023's something around 1,300 euros.
So just crunching the numbers quickly. So if you have access to the 20%, it's actually 15, but you can't deduct additional expenses, right? Or if you deduct expenses, it's still 20. And then you have Social Security, which is another 15, approximately, but only after 1 year.
Exactly. There is a 12-month exemption in the first year of what we call an activity here, that it's basically the registration as a self-employed, as an independent contractor. So for the first year of your self-employed situation in Portugal, there is no doubt that will be much more beneficial than being an employee, for example.
But if you don't have access to the 20% rate, it's more complicated.
Yeah, because in this case, although it's still better than the employee situation due to the coipsas that I mentioned and the caps, for example, for Social Security, well, you will be under the standard rates of the general rates, as we say here in Portugal, of the progressive scale at the different brackets of the income tax that could also reach 48% with the deductions, but it will be an effective rate that will be a little bit less than that. But again, sky's the limit in this case, and it could reach really high values either way.
And we see, Brian, from an employer's perspective, we see that some companies don't like the idea of independent contractors, again, for employment law reasons, but also for potentially permanent establishment reasons, even though it's probably better than an employee, right?
Yeah, and I mean, as far as the permanent establishment issue here, I defer to Pedro, but certainly, yeah, there can be all kinds of reasons it's complicated for a company to ask someone who would otherwise be an employee to classify themselves as an independent contractor. There's labor law considerations in both countries, in every country that it touches for that matter. If there's more than one, certainly people say things like, well, I'm the chief marketing officer, could I work as an independent contractor? Well, you can sort of see why that might be odd to imagine that a chief officer of a company could not actually be an employee of that company and all the strange issues that might spin off of that. So it's certainly not without complication.
Though it's to an extent an uncharted territory, right? Because it's only post-pandemic that we see very senior people leaving the office to another country and in a situation where employment is no longer a viable option, then is it really not okay for them to be self-employed? But yeah, it's still kind of uncharted, and until it becomes clear. Okay, so I think we've kind of agreed that if self-employment is a viable option, it tends to be a better option than being employed by an EOR, and a more compliant option than being employed directly. Then there is another possibility of setting up your own company that for Americans tends to be either an LLC or an LLC taxed as an S corp, and using that in order to invoice a previous employer, or perhaps more than one company. So let's discuss this option a little bit. So yeah, I mean, let's start with an LLC because it's probably the easier between the two, even though it's not that easy. So if I were to leave the US and I set up an LLC before I left, we'll talk about before and after, but suppose I set up an LLC before I left, and now I came to Portugal and I use this LLC to trade by invoicing my employer for my work. So let's start this time from the US side. And Brian, do you see a problem using that from the US side?
Well, I mean, certainly some of it touches on the labor law issues that we just talked about, right? Try to convince me that the chief financial officer of a company can somehow be invoicing this company through another company. I mean, it very quickly gets strange on the smell test, but less so when you move down the ladder of it. But on some level, anytime you toy with the economic reality of the situation and work through a company, no doubt you add some complications that need to be addressed on a case-by-case basis. And again, also with the compliance issues, certainly, now that we're working through an entity, without getting too deep in the weeds here on individual situations, you are adding some amount of compliance work that has to be done on both a state law level, a company that has to be maintained that has certain requirements, and you potentially create more of a tax headache for yourself as well. Say, don't know, say there's two of you software developers in this, then now you have a partnership or a corporation, depending on how you elect, that now needs an accountant and bookkeeping. And so there are definitely, concerns in just about every area of law that merit being addressed on a case-by-case basis. Employment, corporations law, taxation, the list goes on.
On the practical level, though, we do see that people utilize LLCs quite extensively in the US to trade with their employers, and you can then be paid in US dollars and issue invoices in plain English, which is useful, right?
Yeah, it's an extremely common form for a lot of people to work through. I know I sort of addressed the strangest and worst case scenarios, but people do it quite often, and there's a lot of reasons to do it in the US. Even as a single person, and that doesn't really have an analog here in Portuguese law per se. There's a similar situation, but it really bears no relation to saying I am a company and I have a corporate form, but also I'm just me. But it's very common.
And the tax is personal.
Well, you have some choices, but yes, one of the ways, if you are the only person in this company, then yes, you can elect to be an entity disregarded from its owner, is the formal stilted term for it. Yes, you can choose then to have that taxed in the U.S. as though it were just you, as though the company doesn't exist as far as your taxes are concerned, but does exist for whatever other reasons you might want it.
But in Portugal, and this is kind of moving to Pedro, uncharted territory, right? Still very much a gray area.
Precisely, due to the mismatches and difference between the North American legislation and the way that corporates are regulated there compared to Portugal, it's a common issue of the new reality and the new economy, trying to compare different structures all over the world. So the treatment in Portugal, normally it's to observe these LLCs as entities, separate entities, also for taxation purpose, in a way that regardless of the choice, the election and right that you do in the U.S., the treatment will be basically the same as for an entity in Portugal, right? They will be taxed, of course, as foreign entities, but not as persons here in Portugal.
So we have an LLC, and we're not entirely sure that it's not an entity for tax purposes. With an LLC with a disregarded or a partnership election, so it's not an entity in the US for tax purposes, but maybe it's an entity in Portugal for tax purposes. And if it is an entity, then we have to consider corporate tax residency, right? I mean, where is the tax residency of the entity?
Yeah, precisely. As there is clearly a hybrid mismatch, there is a difference in the classification of not only the income derived from this company, but the entity itself. We might also start to think a little bit more about the residency of this company and the consequences of someone who is a partner of this company being a resident, for example, in Portugal. In this case, of course, there are some disclaimer that needs to be addressed, referring to the residency itself and any kind of permanent establishment or corporate taxes that could arise from it, in a way that normally what would be advisable in this case is to mitigate the risk of an effective management in a certain jurisdiction where the partners live. And in this case, we could also mitigate the possibilities that there will be an entity operated there. But all of this refers always to the substance of the effective management. That's what really matters for tax purpose. Again here, assuming that we are talking about an audit and the Portuguese tax authorities, that they are analyzing the structure of this company and trying to find out where the effective management is, then it could be relevant not only to understand where it is allocated, but where the profits of this company will be taxed.
So let's take a step back, because sometimes assuming that we're speaking to people that don't enjoy taxes as much as we do, perhaps listening to this sounds like Mandarin for someone who doesn't speak Mandarin on a day-to-day basis. So just taking one step back, we can see that there are a number of ways for Americans, and we haven't even discussed the possibility of using a non-American company, because that typically for Americans introduces a whole new array of problems and issues and reporting requirements. So assuming the viable options are to remain employed, to use an employer of record, to be self-employed, or to utilize an American entity, then we see that actually none of these possibilities is completely simple and straightforward. If you're employed, your employer has exposure to taxation, and you have exposure to taxation in Portugal, and to registration. If you're self-employed, you can have issues of employer from labor law perspective. If you're employed through an employer of record, you can also have potentially the issues of labor law, and you end up with very high taxation. And if you work through an entity, then it's unsettled, the law of entities, of transparent entities from the US that operate in Portugal. And even if it was settled that the entities are opaque and not transparent, you still have to consider, okay, so if it is an entity, where is the manager? Where is the work done from? How much authority does the manager have? And for a person that's a single person running an entity, that's tricky again. So we have no options which are free of risks and potential issues. And operating in this kind of uncertain, unsettled world, and should Americans just not come here?
Well, I guess it's much more of a matter of utilizing as much as they can the possibilities for reducing the taxes with the benefits that Portugal grants them from the non-capital residency status, and also be aware of the possibilities of, having credits in the U.S. through the foreign tax credits, or reducing their taxation in the U.S. using the FATE, the foreign earned income exclusion, and these possibilities could mitigate this overburden of taxes that could look really high in the U.S. And I'm pretty sure that someone who consults in this area could find the correct solutions for that purpose. And I'm pretty sure that Portugal, it should not only be seen as, a place where you can get tax reductions, but also you will have benefits from the other side, while with a good planning, you can pay a reasonable amount of taxes.
Well, we do see, though, that people coming with the expectation that they can just come to Portugal and pay no tax on their income coming from U.S. clients. It's a myth, isn't it?
Yeah, completely. Portugal is not designed to be a tax taker. It never claimed to be a place where you pay out taxes or something like that. There are specific benefits, and these benefits have a limit of time, and you need to pay a lot of attention to the regulation of it to see if you can absorb part of these benefits or not. The NHR doesn't apply to everything, so you need to really pay attention to all the provisions of the law. You need to pay attention to when you move, when do you register, how do you plan for it. Planning is much more important than just coming here and trying to find solutions after things are done.
So two more subjects I want to cover. One is the foreign earned income exclusion, which hopefully Brian will tell us a little bit about. Let's start with that, actually. So tell us about, when would you be able to not pay income tax on some of your income in the U.S.?
Sure, yeah, and you hit part of it there, on some of your income, right? It's not a magic wand that suddenly makes all of your tax go away. But again, knowing that we're going to steamroll over a lot of nuance here, because we can very easily put you to sleep with all of the the nitty-gritty details, but the broad strokes are this, exactly what it sounds like. Foreign earned income exclusion, to the extent that you have earned income. Again, there's a lot of nuance we're rolling over, but it's mostly what it sounds like: income that you work for, as opposed to income that's sort of generated by capital that you have sitting around. You can exclude a certain amount of that from your taxable income in the U.S. That is, effectively, you won't be paying taxes on it. The exclusion amount changes from year to year. So we're sitting here in 2023. So when we account for this year, that'll be $120,000 US per person. But there you are. Those are the broad strokes. 120,000 a year that you can exclude from taxation in the U.S. of earned income, money that you through your labor earn. There are some requirements to actually claim that. You can't just sort of take a 2-week vacation to Portugal and say, "Oh, great, well, I did 2 weeks worth of work from there, so I'm not paying U.S. tax for that." You do have to be a resident of that foreign country or some foreign country in some form, and there are some tests for that. But as long as you are legitimately living in a foreign country, you are a resident in a foreign country, then you should have access to this credit. Exclusion, pardon me, exclusion. It is not a credit.
Yeah, I think actually we covered pretty much. I mean, is there anything you think worth saying about this subject that we haven't covered yet?
I believe we covered it all.
No, and individual circumstances are worth looking at when you start throwing around terms like.
I know what I wanted. Yeah, so I previously kind of briefly mentioned that the timing matters, it's very for those who for tax or other reasons want to set up companies such as LLCs or S corps, which is a very reasonable thing to do in a lot of different circumstances. Like one thing people should pay attention to is that if they do that before they come to Portugal, that tends to be okay. But once they come to Portugal, we potentially come against European directives dealing with tax planning, and specifically DAC 6, which is fairly recently implemented in Portugal. So yeah, I mean, Pedro, maybe you can elaborate. Can an American come to Portugal and then go ahead and set up an LLC?
Well, this is also a new regulation from the European Union, a relatively recent directive from the European Union that deals exactly with just criteria established by European Union law applied to all the state members for any kind of cross-border mechanism that could generate potentially a tax benefit from them to a certain taxpayer. And this structures, this mechanism, this cross-border mechanism should be reported, disclosure to the local tax authorities. So imagine a scenario that someone creates an offshore basically to just, potentially protect themselves from taxes and for that purpose, or for creating any other kind of cross-border mechanism. Even if it has a certain business purpose, it will need to be justified in order to not report it, because if you are already resident here, a resident of a European Union country, not only Portugal, but any other European Union country, you will be subject to disclosure any kind of structure that exists and that creates potentially a tax benefit for you, as long as it is a cross-border mechanism and there are specific hallmarks that I will not describe them all here, so no one falls asleep. But I'm pretty sure that it's quite a wide and almost generical numbers of clauses that could fall everything into it. And how it will be enforced, it's another question. And the way that it's gonna be treated by the European Union Court of Justice, another question. There are a lot of provisions that are in the directive that are at least questionable, and they are actually under dispute in some cases. But as a whole, it is something that must be in the radar of someone who's coming to Portugal and thinking of having potentially an offshore as a way of trading.
So just to kind of wrap it up, I suppose, and we don't want to put people off from coming to Portugal. It's a beautiful country, and it's great to live in it, but it's not simple from a tax perspective, and particularly for working people, there are these multiple options. None of the options is completely straightforward, and if you don't make your plan before you come, you potentially wouldn't so easily be able to make that plan at a later point. So I suppose the takeaway from this is that, yeah, get advice on your individual circumstances. If you need to make any structural changes, the earliest you make them tends to be the best, the best time. And then, yeah, I mean, it's not that bad. It just needs thinking of. So yeah, thank you for this interesting and rather complicated discussion. I hope we haven't depressed everyone. And we will see you in the next video.